Now, some small business owners are concerned about the high interest rates on loans following the recent hikes in the policy rates. According to the businesses, it's become difficult to secure loans amid the harsh economic conditions faced by entrepreneurs. James Ishan brings us this report.
The Monetary Policy Committee of the Bank of Ghana recently increased the policy rate by 250 basis points to 24.5%. This is the highest policy rate increase since 2017. The rate hike means it will become more expensive to borrow from banks, a situation that will push the cost of living and doing business in the country further up. Governor of the Bank of Ghana, Dr. Ernest Addison, explained that the committee reached the decision in order to check the rising rate of inflation as the country negotiates with the International Monetary Fund for an economic program.
If you listen to the press release that the central bank assesses the situation as suboptimal, right? This is not the optimal thing to do. But under the circumstances, until we agree on the program with the fund, right, we have to contain the situation. The government machinery must work, and therefore we have to help the government machinery to go on whilst we address the larger macroeconomic imbalances, depending on the policies that are agreed and under the fund program. We are late by their assessment, which I also disagree with, because if you would recollect, we started this policy tightening as far back as November 2021, right? It wasn't in January when we got locked out of the market that the MPC started tightening rates. We had already foreseen, issues of prices rising. And therefore, in November 2021, we did our first tightening of the monetary policy rate. We were even ahead of the Fed and some of the more advanced countries, in tightening our policy rate.
But how does this affect the everyday Ghanaian who is struggling to sustain his or her business? On one of my visits to the Domi market, I engaged some small business owners on what the increase means to them. For Maya Efia, taxes on goods should be tackled first. She explains that this may be a way to control inflation, but it's having a great effect on their businesses.
The interest rate in a cost bank who are loan. And no interest any money bobe for. Say me kwaji a loan. Na say interest rate in a wasra. Me make sure say money mana me turn so be cost. Say de be ye menye sika e de atu loan. It is an interest rate in a cost. No cry de be say asam na kura.
Policy rate hikes to me won't help control inflation, because if I go for loans from banks with higher interest rates, that will continue to push up the goods in the markets. The taxes on goods now is high. We are pleading with the authorities to relook at the taxes on goods. Assessing loans these days is difficult to come by compared to years ago. The processes involved is just stressful, which may call for you to give up on acquiring a loan.
Yes, say yama enema boy den dodo. Tax no, yes, rempanin for omunye bibi mfa homayen. Na mahia for brepa. Esan say enema na yebekwa akofan. Esan say tax na ye bebre wo port ho na enipa ntimi ntua nti. De yebegine no nipa ne ba obe make sure so de ni nyina obe chegu ne ma ne so. Ntama ye kofa ne ma ne so ama ne ma ne bo no kwa na ekosoro. Nti yesre omunhwe ho bibi nyama yen. Na omunye bibi wo ho atimi ama ne ma ne bo abafo mama man timamufo no yen so ye ho atoyen. Say de loan je no ena form sa. Enti se first ya na banks no yengugu no atwa ye ho ahia Gen Bank wo ho Unique Credit ofa ha ya ma okakra say na ntisa ye do be fa process bebre mu ma wo be wie na waba mu kura abu baba mu abu kura se loan wo kwa akwaje ukoje so ade da so no say kura ye ntimi ntua no masa mosan pagam ene na adwadifo ma ade iti ate afri so ano no.
With reports that some banks in the country have begun suspending loans to new and some existing customers, Paul is one of such persons affected by the development. Paul says it's disheartening to have such development. he called for proper measures to sustain local businesses.
Oh, okay. Actually, with the interest rate of going up is very bad for we, the small holding business, you know, because let's say you go in for bank, you go in for, let's say, amount of money and you want to work with it. Imagine they give you amount of money like, let's say, 10,000 Ghana cedis to come and work with it. And later you go in, the interest rate is higher than compared to the old time. I mean, you can sell 10 boxes of, let's say, staffs. And later on, when you are going to buy these 10 boxes, you cannot even buy the 10 boxes again with the money that you went for. Because as soon as you finish selling, the goods go high. So let's say you can buy 10 boxes of, let's say this April, you can buy 10 bucks. Later on, you go back again, you are going to buy, the amount of money you used to buy the 10 bucks for the old previous one, cannot buy. You have to buy like 8. And when you want to go back and pay for this bank loan, it doesn't make sense. After all, you are really going to lose. And when you lose too, you don't get any income in it. Like, I don't know if I'm making sense though, but the bank rate, that is the policy they're bringing out right now, is very bad, and it's really going to affect us with the small holders in business.